Welcome back to my chart proposals on Friday the 19th of June with me, Rich Perry, market analyst at Tech Markets. Let's move on to dollar yen now, and we've had some interesting moves actually on dollar yen in recent days. We had this sharp move to the upside that retraced on the back of the Fed. 24.43 was the high, about 200 ticks actually retraced back down to 22.46. Interestingly enough, we've got this fib retracement in these fib lines in, and the 50% retracement continues to provide the basis of support. 22.35 caught that low there, caught that low yesterday, and then we're rallying again. Now let's look at this on the just very quickly, we're still slightly in corrective mode actually. However, I'm looking at these stochastics and they're starting to bottom out a little bit, and the fact is that the RSI is still holding on around 50. I think we may, because I've been talking all along about the fact that I think that we're going to get another sort of like a retracement back to 22 figure, at which point I'd be looking out for the next low. The fact that we've had a couple of lows in place now at around that sort of 22.35 50% retracement level, I think could suggest that we're sort of seeing the lows being placed now. Looking at the intraday chart, I think it's still got that fib level in, that fib retracement in of the big bull run, and just zooming in, you can see that there was that fib retracement at 50%. Seeing that 38.2 is an interesting level, isn't it? Look at the amount of times it's sort of used it as resistance there on the 10th, then became supportive on the 12th and the 15th. Supportive throughout. There's that sort of trading band area there, and it's becoming resistance again today. So this is again a key level. If you can start to see dollar yen breaking through that 23.20 mark and start to consistently push higher, then we might you can start to think that perhaps there is a low in place. 23.60 is also a resistance. That was the rebound in the wake of the Fed. 23.60, so that is another level that you need to look out for. But certainly at the moment it looks like potentially is that if you start to see this breaking through the 38.2% fib level, then you could start to see some further gains, because it certainly looks as though a couple of tests of that support have held at 50%, and I think the outlook is beginning to maybe potentially improve a little bit. A little bit of dollar strengthening, although only a little bit this morning, nothing too outrageous. But as I said, if you can start to see that moving through 23.20 on a consistent basis, I think that would be a strong sign, and then that would be confirmed, I think, on a move above that reaction high at 23.60. So there are a couple of levels there for you to work with on the upside, but certainly looks at the moment as though it's sort of consolidating and just trying to use this dollar strength to drag dollar yen higher again. So the test is on, and it'll be interesting to see how it goes today. In terms of momentum indicators on the near-term basis, well, they're fairly neutral, really. Sort of MACD lines have picked up, RSI has picked up, stochastics have picked up as well. So it's fairly neutral, but it's a very interesting test now of that 38.2% fib level, and we'll wait and see how this one turns out. But it's yes, interestingly, as I have said several times in the past, dollar yen using these Fibonacci levels as a strong basis for trading. So I wish you good luck in your trading on dollar yen, and I'll speak to you later. Thank you.